Hi, everybody. I hope you have listened to part one of how to negotiate a licensing deal that Stephen and Alita have put together for us. And now we are back for part two to discuss some more tools, tips, and techniques for negotiating deals. So we will just pick it up from there. So Stephen and Alita, go ahead.
Excellent. Thanks, Marty. And yeah, we had a great session. Hopefully you were a participant in part one, where we went through the license agreement deal memo. And we talked about the licensed parties, who the licensor is, who the licensee is, the licensed property and the licensed products and the importance of specificity. We talked in detail about royalty rates and strategies for negotiating royalty rates and the term of a license agreement and some other key deal points. Once the license deal memo is completed and everybody's in agreement on all the key deal terms, we then go to the long form agreement. And here we get the lawyers involved, and very often the licensor is going to require that we use their form of agreement. If you're a licensor, you always want to be using your form so that most of your licensees, at least in structure, have a consistent agreement. I have seen a couple of licensors that are using licensees forms, and now they're all different. There's no consistency. So a licensor should adopt a standard form license agreement. And I have a form that our agreement conforms to the licensing deal memo. In fact, that deal memo we discussed last session forms an exhibit or a schedule to the form license agreement, so you have all the deal terms. Other attorneys feel more comfortable plugging the deal terms into the text of the license agreement, but somewhere along the line, you're going to have a long form agreement, anywhere from 4 or 5 pages to 50 or 60 pages. What's in there and why? And that's what we're going to discuss today. Alita, what's the longest form agreement that you've ever seen?
I think it was probably close to 50 pages. And I always tell the clients that are licensees to make sure they have their own attorney to review this, because if you're using an agent, the agent might have seen, 10 or hundreds of agreements before. But I always give a caveat and say, I'm not a lawyer, so make sure your lawyer is reviewing this agreement no matter what.
Yeah, and it's very important that you have the lawyer look at the long form agreement, because this is the contract. This is what you're bound to. And licensing agents are not licensed to practice law, so they can give advice on the deal terms and share with you experiences that we're going to share today. But yes, the long form agreement really should be reviewed by a experienced licensing attorney. So let's go to the next slide, Steve. And we talked last week, or in the last session rather, about the net sales definition. The deal terms, we mentioned how we're going to base it. Is it going to be on wholesale or retail? But I wanted to look at in depth a definition of licensing wholesale sales and that term dilution that we talked about and the cap. So let's put up on the screen, Steve, if you go to the next slide, let's put up on the screen a definition of net wholesale sales. And I highlighted a few things for our discussion. Net wholesale sales is defined as the gross invoice price charged. That's very important. There's a reason it's highlighted. For the licensed products sold directly or indirectly by the licensee, less only documented returns, discounts, and allowances actually given. Some people require that there's a credit memo, or it's on invoice is another term, but documented. Cumulatively not to exceed 10% of gross sales in any quarter. And then if there's separately listed shipping charges or taxes. So you have there what's deducted from the net sales definition. That's the dilution, returns, allowances, discounts. You have the dilution cap here 10%. But the key here is it's based on the gross invoice price. So as soon as a licensee sells goods and invoices his customer, that triggers a royalty being due. What happens if the retailer or the customer doesn't pay? It's been an interesting question, and when Toys R Us filed bankruptcy and Kmart and Sears filed bankruptcy, the seller, the licensee that sold the goods, never got paid. But if you have a definition based on gross invoice price, and you see uncollectible accounts highlighted below are not deductible, Mattel and some of the big toy players had to pay Disney a royalty on money they never collected from the retailer. So very often now a licensee tries to use a definition called net paid sales, or the money they actually received. Instead of basing it on gross invoice price, you could base your net wholesale sales on the net collections or net money received, in which case that word uncollectible accounts would come out, because if the account is uncollectible, you never collected the money, you never received it. So very important here in this definition, licensors generally want to get paid. The trigger is the invoice price, but licensees have been pushing lately to do it on collections. What are you seeing, Alita?
So I'm still seeing it based on this top net sales, and the uncollectible accounts really has not come into play lately and anything that I've been seeing. But just for our viewers, what we're really talking about here is when you go to pay your royalties on what you sold, you know you invoiced your customer, but you may be able to back out anything that was returns, possible discounts and allowances. Let's say you're selling to a retailer and they have an automatic deduction for damages. You will be able to back that out. So you're lowering the amount that you're paying the royalty on. And that's all that's really happening here. But you just have to get into the detail of the definition. Otherwise, the licensor, if they decide to do an audit or if they decide to question anything, it's all going to come back to this contract and the interpretation of what this net wholesale sales and your royalties, what are they being paid on? It all comes back to the contract.
Really important there, and you brought it up. If you have guaranteed sell-throughs or guaranteed margins like at Macy's, and they're taking deductions and discounts, very important then as a licensee that you make sure your definition of net sales, net wholesale sales in the agreement is consistent.
And that's negotiable also. Even outside of this royalty, this license agreement, when an entity is negotiating with the retailer, those are terms that can be negotiated also. I don't want to digress, but just to give an example, I remember when Amazon was buying goods and we were the manufacturer, we were selling them, and they had an automatic 2% that they were taking off for damages, for example. We never had damages that got to that amount in the history of the company. So we were able to negotiate a lower damage. So that's something to think about also.
But really important, if they are taking that automatic 2% every time, the licensee, you don't want to pay royalty on money you're never going to collect. So you want to make sure that that 2% is deductible from your net sales definition as well. So you're not paying a royalty on that money that you don't receive. Otherwise, you see that explanation, no deduction for cash discounts, early payment discounts, year-end rebates, or of course, any of the costs in manufacturing, selling, distributing, advertising, sometimes co-op dollars, uncollectible accounts. And of course, all of this is negotiable. If you wanted a net sales definition that covered some of those things, make sure that it's covered properly in the agreement. Okay, so if we go to the next slide, Steve, so you see we covered the net sales definition. Retail sales, by the way, you may want a whole different series of deductions because you may want Amazon fees or affiliate fees, credit card fees, etc. But again, if you're using a net paid sales definition, it would cover a lot of that. The next section in the long form agreement that would follow is this royalty reporting, the timing, what form the licensee is supposed to use, and the books and records and inspection. So here's two sample clauses that I pulled out of my standard licensing agreements. Generally, royalty reporting is 30 days after the end of each quarter, but I've seen deals where royalty is reported and paid monthly. I've seen 45 days after the quarter, 20 days. But important that you send a royalty report with the payment, and you send the royalty report even if there's no payment. Well, why do you have to send a report if it's zero, like especially when a license is first starting? Because the licensor doesn't know it's zero until you tell them it's zero. So they don't know if you just forgot or it got lost and they never got their check, or it's actually zero. So always send a report from the moment the license starts. Many licensees require licensors require that you use their form. Many subscribe to Brainbase or Flowhaven or Royalty Zone, these services, My Media Box, Maestro. There are many programs out there that help track. So licensors, you can use some software and they could upload their report right into that software, and it will track consistent with product approvals and things like that. Alita, are most of your licensees using their own forms or using licensor forms?
We're using the licensor forms. It would be fabulous if everybody has standard form, but that's not the case. So it takes a lot of time every quarter to go through and calculate these royalties and complete the report. What we're also seeing now is when that royalty report is due, we're seeing an additional call out for updated forecasts. So we'll get into forecast in a little bit.
Yep.
But a lot of people are asking for those at the same time. So the businesses are constantly trying to reforecast, both their revenues and expenses, so that they're asking the licensees to really think about what their sales are going to look like for the rest of the year and then forward.
So you're reporting a quarter that just ended, as well as revising your forecast for the quarter you're in and the next quarter usually, right?
Right. Especially if you had, let's say you forecasted a sale and it gets pushed out a quarter, maybe the goods didn't come in or the retailer wasn't ready to take them. So, unless you put that in your report, the licensor is going to have no idea. And they're going to say, what, I thought you were having like a huge sale. Where'd that money go? Well, it got pushed. They would see that and notice it in the forecast. So a lot of reforecasting.
And the reporting, when it's due, what it has to have in it. Very often you're reporting by SKU, you're reporting volume by retailer, so they know who your biggest accounts are. Obviously, there's a calculation of gross sales, how you got from gross to net based on that definition. So that's why you can't deduct things that weren't in that definition. And then the royalty due, and that's where your check has to come. And of course, if you've already paid guarantees or minimums, or you have a minimum that quarter, that gets reported and reconciled as well. The long form agreement also has a audit clause or an inspection clause. It requires the licensee to maintain their accurate books and gives the licensor permission on 3 days notice, 7 days notice to come in and inspect those books and records to make sure that you're reporting properly. They're also going to look at your inventory. How much did you buy? You bought $1 million worth of this coffee mug. You only sold 200,000. You only have 100,000 left. Where'd all that other merchandise go? You must be underreporting if your inventory minus the goods sold, ending inventory don't equal. They know that there's something missing somewhere. So those need to match with your import records and your production records. So they can go back and look and see that paper trail. I think I mentioned in the last call, it's very hard to intentionally fudge your books today. Why? Because you have these import records that the licensor can get. You have factors and retailers that can show what they've sold, and you could recreate a paper trail, and all those numbers have to match if they come in and do an audit. And it's really important because that audit is expensive, and if you've been reporting properly, the licensor pays the cost of the audit. But if you look at the last clause there, if it finds 5% underpayment, now the licensee has to pay the cost of the audit, all the money that's past due, interest, and any collection costs. So it gets very expensive as well to not report and pay royalties properly. Alita, have you been involved in any audits recently?
Well, Stephen, since I am a CPA and I am an auditor, I've been involved in lots of audits. However, I can tell you that I have not been involved in a license audit. So, so I have not gone through that process, and sadly, I don't have any stories for you.
I'll tell you the interesting thing that we had. It came up twice recently. So I've gotten into now sometimes liking to notice audits and not necessarily ultimately have to conduct it. We had a licensee, we were working with the manufacturer, and the licensor sent an audit notice. This was routine, it just came up random, they weren't suspecting anything. They sent a random audit notice, and they said, in order to prepare for the audit, please send this, 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 and this. And there was a list of about 8 or 10 documents. When our client gathered those documents and analyzed them himself, they picked up 2 errors, one from the current year, one from the prior year, and they reported it and paid. Then the question became, did the audit reveal the underpayment? And the licensee says, no, your audit, you never conducted the audit. We sent you the documents, we told you about the error that we found. And so they ultimately never had to pay the fee of the audit, but because they asked for the audit, it revealed some interesting information before they ever got there. So I've actually seen that happen twice.
I know on the music royalty side, I've seen where if royalties get missed, they end up having a huge negotiation because it can get into the millions of dollars. And depending on, how many years they waited in any audit, they waited to conduct that audit, the numbers can really build up. So you just really keep it honest and keep it on time.
It doesn't always have to be adversarial. Like I said, if there's going to be errors made, very often they're not intentional. So you would want to pick those things up as early as possible so you don't get into a situation where that same errors happen 3, 4, 5 years in a row, and now all of a sudden there's $1 million, $1.5 million that are owed that go back 3, 4, 5 years, and amending tax returns and the triggers and things that especially for public companies, disclosures. So it's not ideal to do, even if you're a licensee, do an internal audit check. Are we reporting everything properly? The computer coding is the one place where I've seen, and we mentioned this example last time, the one place where I've seen the unintentional errors happen pretty consistently. So always a good idea to check that. And then There should be some other confidentiality. We'll talk about a confidentiality clause, the scope of the audit and the timing, and the parties can work together. Again, it's not always adversarial. If we go to the next slide, Steve. So we've talked about the net sales, reporting, audits, financial planning, forecasting, and Alita was talking earlier about updating and re-forecasting. Very important in the long form agreement, what kind of forecast do you want to ask your licensees? What do you want to get in the prior year so you have a forecast, what their expectations are for the following year? It helps for your planning. Knowing what retailers they're going after helps for your licensing program. And it also helps keep your licensee on their toes with their inventory requirements. And if all of a sudden they're forecasting they're going to do $8 million in sales, but they're only forecasting to produce $1 million in inventory, well, how are they going to do $8 million in sales? Where they need to make sure that their inventory, their number of SKUs, their programs match those forecasts. How often are you updating those forecasts, Alita?
Oh, wow, a lot. We are seeing, upon signing a deal memo, we're seeing forecasts brief, sort of year 1, year 2, year 3, you know, total sales per territory anticipated. Then when we get into the contract, that gets included. And then we're seeing whatever system is used by the licensor, the need to upload all the information in there. So all the item numbers, all the SKUs, even images of the product that the licensee is going to make is going in there. And that is getting usually done for a yearly forecast. And then what I'm seeing is updates by quarter now. So the licensors are really looking into their financial forecast by having the licensee provide these forecasts, like I said before. So it's kind of a pain in the neck, to be honest, because—
But it's super healthy. It's a super healthy exercise.
Right, and it also gets everyone involved, right? Because now your product team, your marketing team, your sales team, everyone is involved in this process. So don't think of licensing as just being over here, you know, in this corner of the office. It affects everything in the daily business. So everyone needs to be on target. And forecasts are forecasts. They're, you know, it's like a budget. It doesn't have to be at, you know, 100% because you don't know. But knowing what you do know at the time is what they're asking for.
And it shows you where there are weaknesses in the plan. Your forecast didn't include a certain major retailer. Why not? What's it going to take to get into that retailer? Very often the licensor can help you when they see, hey, we have a ton of product at Target and your forecast doesn't include Target or, you know, Macy's or somewhere else. Well, then the licensor can work with you to get into that channel of distribution. And like you said, Alita, I'm seeing forecasts sometimes that, hey, we're projecting, you know, 2 million and it's very broad brushed. And sometimes we see it get very specific down to the SKUs, number of SKUs, which products, which retailers, and which products at which retailers. Mm-hmm. So the forecasting for good programs can get very, very detailed and very specific. And then not only are you go ahead.
I was going to add, it also can get very detailed because a licensor has agreements with the licensees for certain categories. And if they have a category or a certain item that the licensee has contracted for, and the licensor every quarter has not seen them making that item, they can potentially look to license it to somebody else. So let's say you're supposed to make calendars, and every quarter that goes by, the licensor is saying, you know what, you guys have calendars, but I don't see you making any printed calendars, selling anything. It's not in your royalty. It's not in your forecast. You know, we're going to look for another partner in calendars. So that's another thing that happens with the forecasting is that you can identify items and categories that may be kind of left on the table that the licensor can go look into.
underperforming categories. And again, that's a term I used in negotiating the deal terms. Licensors, you always want to avoid having licensing deals with underperforming categories. Look to upgrade, look to replace, remove it from one license, and find another partner for those categories. Let people do what they do well, but don't have a whole bunch of things included that they don't do well. Not only are we forecasting the products that we're making and the sales, but if there are advertising and marketing requirements in the license, there's a marketing plan. When are you coming out with certain campaigns? What are your contributions? Where are you advertising? What does the campaign look like? And if the licensor has a plan, like for example, we're having licensing with FUBU and it's their 30th anniversary. Well, we're requiring our licensees to be celebrating that 30th anniversary with us. There's marketing, there's events around product launches, movie releases, and things like that. So your marketing plan, especially when there's a marketing requirement, needs to also be forecasted, planned for, and updated as we go.
I'm seeing a lot of requirements for an additional percentage of the expenses by the licensee have to be spent on marketing. So, and they have to account for that. So you're basically paying a marketing fee, and you have to detail what did you do to support that marketing. Now, some want the actual details. You know, we spent this much on a PR agency, we spent this much on these events. But think about trade shows. They may or may not be able to be applied to that marketing fee.
Trade shows, trade show advertising in the magazine, right, or
in the trades.
Yep.
Right. So that all usually industry-wide, that will count towards your fee. Another interesting one I saw is with one of the big sporting licenses, they require a minimum spend on marketing with their the relationship they have an entity. It's hard to say it without saying who it is, but everyone knows Fanatics, right? Where you're going to go buy, you know, theoretically all your t-shirts and jerseys and knickknacks with your favorite team names, and they're getting into other areas. Well, if you're working with any of those leagues, you may be required to have a minimum spend with Fanatics specifically that you're going to have to pay. So that's something that you could see that, you know, the licensee may not anticipate. So they have to kind of build that into their plan and their negotiation.
You know, it's important, and I just want to backtrack for a minute, because there are two kinds of advertising requirements in license agreements. And we could also talk about this. You should cover this during your deal memo and the term sheet. What's the advertising requirements? Sometimes the licensee has to contribute to the licensor, and the licensor runs the marketing, and they say to our licensee, you have to pay us a GM advertising, guaranteed minimum advertising allowance, or 1% of net sales or 2% of net sales that the licensee pays to the licensor. And the licensor,
and they call that the Common Marketing Fund, the CMF. If you see CMF, it's the Common Marketing Fund. And right, basically you owe another 1%.
Okay, and the licensor then spends that money. The other advertising requirement is a contract that says, licensee, you must spend X on advertising, and that's very often referred to as an advertising requirement. Sometimes you have either or, sometimes you have both. And I've seen a deal recently where if you didn't spend your required advertising spend, you had to pay it over to the licensor. So you're highly incentivized to spend as much money as you promised, because either way, you're gonna have to pay it out. And that could get covered in the audit and reporting too. On some royalty reports, you have to report how much you spent and where you spent it. And of course, like you're updating and forecasting, you're updating that plan throughout the year as events change and things change, because it is only a forecast. Okay, we're getting through this 50, 60 pages pretty good. These are the clauses that are in there. The next big section in the long form license agreement is going to talk about quality controls and approvals. Approval of the product, approval of the packaging. I use a three-stage requirement. Many licensors require samples and submissions at 3 stages. 1, your concept and your development. When you have boards or CADs or just images, let's go over, let me show you what we're planning. And therefore, you're seeing the kinds of products, whether it's toys, whether it's figurines, t-shirts. They're seeing the artwork. They might say, hey, we don't like this brown color. This isn't on brand. And make it larger, make it smaller, change the sizing, or these 2 characters don't go together. First, boards, CADs, and that's just imagery because it's conceptual. Then pre-production samples, very often with strike-offs, with swatches of fabric or miniature, models, but it's not a production run. It's a strike-off or a single hand sample, they call it sometimes. And then, of course, when you do your production, you have to submit final production run samples, both the first run, the first time you produce, and very often you have to submit more production samples annually. 6 samples, 12 samples, 36 a year, every year that you're running those products. How are you dealing for your licensees, Alita, with the sample approvals?
So one thing that's really interesting is licensees are really sophisticated. And in addition to their art department, or if they outsource their art, they might have printing machinery and things in their domestic offices where they can make samples and mock-ups that look so good that sometimes the licensor often thinks that they are final or production samples. And so it's very important to be clear on what is being submitted, what is being sent. Now, what you're talking about here is sending actual, samples, physical samples, through whatever shipping service you're using. And it can get a costly expense of doing this business as well, because once you have international territories, you're often shipping international. Or if the parent company of the licensee that you've licensed with, let's say you chose and you knocked out the US territory, they might still want the samples to go to Europe to approve them if it's a European agent. So you have to be very specific about what is being sent to them to let them know, because when they get it and they look at it, they look at the language, the colors, the printing, if it's tactile, is the quality there? Is it overmade? Is it undermade?
It doesn't work. If it's a toaster or a blender, electronics, it's got to work. If
it's supposed to have a sound chip, is the sound chip in there? If it's not, why is it not in there? Make sure that you set the expectations. If it's supposed to have a scent, a smell to it. Again, I've done some work with some of the biggest candy companies, and samples are going back and forth, and it's obvious to the licensee, oh, well, we had scent during only the final production run. And so you have people in the office, smelling different things, trying to figure out what the scent is. And so you don't want to have that disconnect. You want to explain if sound or scent, smell, or color, if it's all from it.
And there's a lot of detail that goes on during this stage. There's a lot of back and forth. Very often, listen, you have some licensors that are, all right, we approve everything, it's very easy. You have some that are very difficult, that are looking at PMS colors and every little detail. But there's a lot of back and forth, and you don't want to be in a situation where you produced inventory and they don't let you sell it because it hasn't been approved. Get it all in writing. Again, the softwares, the programs are super supportive of this. All of the comments are there. The record is there. We're approving product, quality control, look and feel, making sure it works. We're approving, licensors are approving the channels of distribution. because certain goods, certain branding is fine for some channels, but not used at others. And if you go to the next slide, Steve, we're also looking, go one more, at the manufacturing requirements, that your factories are all compliant. There's a full section of the license, long form license agreement, making sure that your factories are compliant. Very often the manufacturer, the factory, has to send back an acknowledgement letter acknowledging they're making trademark goods. They're not going to sell it to anybody else but the approved licensee, that they're not using child labor. There's a lot of compliance. Alita, have you worked with requiring manufacturers, factories to sign these?
Yes, yes. What I'm seeing lately is there's a couple of different letters that are required. So once you sign that license, any manufacturer is going to have to sign a letter with the licensee, their own manufacturer. You want them to have a letter that they're making goods for that specific entity, and that they're going to state that they're not going to sell them to another entity, because again, you don't want your product knocked off. But customs comes into play also if you're making something overseas and you're bringing it into the States or anywhere else. There are forms and letters that need to be completed as well. So I have a recent case where we're working with a retailer, and the retailer was buying certain items, and in the manufacturer representation letter, it did not clarify that the licensee had the rights to make certain items that were in that order. So we had to go back to the licensee to have them reissue the letter with those items listed. So the retailer could then say, yes, okay, we'll buy them now because we see legally you have them. So be careful of, it's not just categories, it's not just you have t-shirts or stationery, but what kind of t-shirts, right? You know, and what kind of stationery, because it could get very specific in these letters.
And then seconds, IRs, there's some provisions. What happens with those seconds and irregulars? So we've covered some net sales, audits, inspections, the financial, the sections on quality approvals. Very often, right after the quality and approval, we get into some of the real technical legalese now. And the most important one is the trademark ownership rights. Who owns the trademarks, copyrights, patent licensing, trade secrets? So there's very often an acknowledgement from the licensee to the licensor that, hey, we appreciate you own this brand. This is your property. We're not going to contest or try to fight you. But it goes a step further. What happens when the licensee makes an improvement or uses the artwork or creates a design or something that then gets approved and used in the product? I call them derivatives or creations, improvements. A good, well-worded pro-licensor license agreement will say anything that you create using my brand, we own. So Disney's licenses, if you create an interesting look and feel or Mickey Mouse or some, you know, other design using the IP that's included, that's automatically going to be owned by the licensor. I've created carve-outs for patents, especially for our toy company clients and things like sound chips. But very important that you carve those things out if there is going to be anything retained by the licensee. And I have some tips and tools for negotiating using the terms inextricably intertwined or inextricably relying on, because if you can use that design or that and remove it from the licensor's IP, well, then the licensee should own it. But important how you define improvements, derivatives, and creations.
I think with the trademarks and the copyrights, it's also important to note that it can get very geographical where that trademark is registered and where it's not registered. So if you are making a certain category of goods, you need to make sure that the licensor and brand owners, you need to make sure that you have registered the trademarks in the appropriate territories where you're going to let the licensee sell. So when you talk about the geography, in the very beginning, in the deal term, if you're going to give them Europe or Asia or specific countries in Latin America, you have to make sure you've registered that category of goods. Now, what you can do, and what I did just recently for a client, is while we're waiting for the licensor to get that trademark registered in that territory, because sometimes it can take a long time,
Years.
you can use the artwork with the TM, the little trademark symbol, as opposed to the registered trademark symbol. And that will protect those goods that are out there in that brand name until the registration is finalized. And then you can change your art and start using the registered trademark.
So I'm going to jump ahead, and then we're going to come back up to termination. Steve, you don't have to move the slide. Let's leave it where it is. But I'm going to jump ahead to the warranties and indemnification, because while we're on this topic, the warranty is a promise, a guarantee, and insurance from one party to the other. So the licensor generally warrants, hey, we own this. If you use this trademark and this image that we give you, you're not going to get sued. And vice versa, the licensee is going to warrant and promise our quality control is going to be good, the blender we make or the toaster won't explode, that the children's pajamas won't catch fire, the quality is first quality. And a warranty is a promise about certain conditions. They own the trademark, they won't get sued. With quality control, the licensor won't get sued because of something the licensee did. And it goes a step further, and indemnity says, if you get sued, we will stand behind you. Now, an indemnity is only worth something if the party giving the indemnity has significant assets and value, and that's why both sides often require insurance. Especially the licensor is going to require the licensee to not only give an indemnity, but to have products liability insurance and provide a certificate naming the licensor as an additional insured. That certificate is usually due within the first couple of weeks after a license gets signed. Dot your I's, cross your T's, submit that, call your insurance broker and submit that proof of insurance right away.
Usually within signing those deal memos and the contract, usually I would say almost within days, the request for those insurance letters are coming. It's really easy to get them if you have the insurance. It's a phone call to the insurance company, but they want them right away.
And the amount, you know, especially if a company's carrying $5 million insurance and you have to have $1 million policy in your agreement, it's easy. What happens when it's the opposite? You only carry $1 million in insurance and the contract requires $5 million. Now you got to up your insurance policy. That's why it's important you read these clauses, you understand what the insurance requirement is, and it matches with what you have. Let's jump up to the termination section. If you go back a slide or two, Steve, let's jump up to termination. So there's going to be a whole section on what's an event of default or a breach, and when the parties are allowed cure periods. And if they didn't receive a certain payment, okay, fine, we're going to put you on notice. We didn't get the payment. Maybe it got lost in the mail. You have 10 days or 30 days to cure the default. But very important, quality assurance or other breaches don't have a cure. If you released, you had license for food or candy and it had poison in it, how are you going to cure that? You've already done the damage. But those are breaches. What happens when you breach? Can the licensor terminate? You accelerate GMRs and GMS, very technical language. And then really interesting thing we're seeing a lot now, a trend with celebrities and even companies getting in trouble, political views or child labor or other things, sexual harassment things, to have morals clause both on celebrities Tiger Woods, Paula Dean stories, you all know, but morals clauses for a company too, because certain companies don't want to be associated with other companies.
That's such a really big deal. There have been so many stories in the news when you see items getting pulled off of shelves. And it's not always because of a recall. It could be because the name on that brand or the name of somebody associated with that brand did something wrong, and it is damaging to the brand. So they will pull it. They will go after the licensee if that's where it is. It'll go after the licensor if it was a brand that is a celebrity or somebody that did something wrong. Even, we don't want to get political here, but if you look at like the last 4 years ago at the election, and the fact that the world was going crazy because Trump was running for president, and his daughter Ivanka had lines of jewelry and clothing and a lot of things at retail, and was promoting it. And being that she was in the limelight, there was a lot of attention to that. So eventually the retailer started pulling her licensed products out of their stores. And again, did she do anything wrong? Maybe not, but the association and the negativity was hurting their brand. So, or was hurting the retailer, let's say.
We talked about this with some of the other celebrities. Duck Dynasty, huge licensing program, and they went and said some things or did some things. The next really important section, assignments. How do you assign the license or change of ownership? And by the way, this runs both ways. Sometimes the licensor is selling the company. I did a whole lecture on brands buying other brands and companies buying other companies. And it happens both from the licensor side and the licensee side. Licensors, you want your agreement to allow you to sell your company and assign the license. We had a really interesting thing recently where a brand, I'm not going to say the name of the brand, it was a very important fashion brand, and our client had the license for handbags. The brand got bought by a competing handbag company. Now, they have to give their forecast. They have to show their designs, their factories, their costing information to a direct competitor. It's a very awkward situation. So licensees want to put a provision, if you assign, I have the right to walk away. I shouldn't have to work with somebody I don't want to work with. And licensors, very important, you have an anti-assignment change of ownership provision, because there may be somebody you don't want to work with. They don't have the same financial capabilities. They don't have the same design team. The reason you granted that license is because you believe that licensee is the right company, and they can't just assign or sub-license that license agreement.
So Stephen, on that note, I have a really recent story, which is a young company that's the licensee, who's been in business about 5-6 years, but had been in business prior to that, had every wherewithal to continue their company, another 10, 20, 30 years. And the licensor required a $50,000 fee if there's a change of ownership. Now, a change of ownership was even defined, right, as a majority change. So if it's over 50% of the company and they change the ownership, it could be, a great good faith deal that the licensee is working on, but the licensor wants $50,000 because why? They might have to go out and find another licensee, and it's going to cost them time and it's going to cost them money, and it's a big deal to start to make the change.
So really important. And by the way, there are fees. You have to request consent, but that's an important provision. It's usually in the back in the standard miscellaneous clauses. And then before we wrap up, 3 other clauses that you're going to see, 3 other sections toward the back of the agreement. You're tired of reading notice provisions. Very important. How do you give legal notice? It's going to say days, ways you have to mail, copies you have to send, but very important. be specific how that notice is given in order to trigger notice. Confidentiality, very important. Very often it runs one way from the licensee to the licensor, but licensees, you want confidentiality too. You're giving information about your factories, your pricing, your retailers, your volume. You don't want that being shared. And then the last clause toward the end of the agreement, choice of law, arbitration, and jurisdiction clauses. This one I've actually seen, it looks like it's so not important. I've seen deals blow up over this. Why? Because it determines where there's going to be a dispute. And if the licensor is based in California, they're going to want to have that dispute heard in California, but the licensee is in New York. What kind of law applies? Arbitration. This is really important. Know that you're going to have to hire attorneys and travel out to California if there's a dispute. Alita, are you seeing deals break up over this?
I'm not seeing deals break up, but I am seeing things that even cross countries. So for example, there is a Canadian owned brand, piece of IP, and when they do some of their deals, they want the territory to be Canada. They might want it to also have arbitration. And if you're, a US-based company, you may, sign off that that's fine. But then if something happens and you are going to have some kind of suit or claim, you have to recognize that you're going to have to go to Canada. You're going to have to get counsel there. You're going to have to understand it because it's different than the US. So the territory really is important. And try to negotiate.
Yeah, so important. And by the way, in international deals, last word of wisdom, very important for the license, both parties, licensors and licensees. If you have an international contract, you want to make sure there's arbitration. Arbitration is much better enforced internationally than a litigation or a court judgment. Domestic, they're about equal. One's faster, they each have advantages and disadvantages, but international contracts want to include an arbitration clause, and talk to your attorney about why. We're going to take questions. If you go to the last slide, feel free to reach out to Alita or myself. We're here. We love this industry. We love what we do. And thank you for spending these 2 hours with us.
That was a really, really complete presentation, and I thank you both for that. That last point was actually a really interesting one about an international, if you have an international relationship, because we have so many students from around the world participating in CLS, and if they ever do deals with each other, then that last statement might have been the most important of the entire 2 hours.
They're both going to say to each other, but Steve Heller and Alita Friedman said, we need arbitration.
So on that note, thank you, Stephen. Thank you, Alita. That was a great 2 hours. As everybody will see, and you'll be able to get a copy of the presentation, also the physical presentation, but you can see their contact information and feel free to get in touch with them. Tell them you're a CLS student, and I'm sure they'll get back to you very quickly. So thank you, everybody. Thank you for your attention. If you didn't see part 1, go back and view part 1. So thanks, everybody, and have a great rest of your day.